Hey, what's up, guys? It's a Ted here with some bodies and wicks. Uh, Sorry about the short one, or just the not really short one, but the out of nowhere one yesterday. I didn't really have time to put anything together, but just because everything was happening right at the right time, and I was just about to catch it, and I was like, I just gotta catch it on film first before I explain anything. If you have been watching any of this series, and you know what this is about, it's about the smart money take on crypto, which a lot of people don't subscribe to. So, quick rundown on what smart money is basically it is an algorithm, right? It is put into all these charts. Only the people that have the big money are technically the ones that know how to read the algorithm correctly. But if you have the right mentor, wink wink, and you study enough, you can find the algorithm yourself. And it's the exact opposite of what you'd call dumb money, I guess, or retail trading, which is if there's three highs in a row, the next time you get to that high, you're supposed to sell. Well, smart money would tell you to buy because above that is a pool of liquidity. Or we don't use trend lines or to trade off trend lines anyway. Don't use channels. There's no such thing as channels. Flags, pennants, things like that, where you are taught to trade in a specific way based on a geometrical shape. No such thing as that either. Harmonics. Harmonics don't do us anything. They're real. All of this stuff is just really kind of textbook stuff to trick you into thinking you can learn how to trade when in fact you're probably just going to lose money out of all of it. So instead, smart money is a way of learning how to read the chart and knowing what may be coming next, based on knowing where the liquidity is and knowing that the chart needs to balance. Right, so those are the two things that we come up with. So we're doing Ethereum again because I wanted to follow up from the video yesterday, and it turned around at the point I said it was going to turn around at, right, and it hasn't turned around since. So let's go ahead and go back to those charts. Why don't we? That would be great. That would be wonderful. Except for I wish I had it all set up. All right, and how about you know, maybe yeah, never mind. Here is the chart from yesterday. Yesterday we were down here, right? That's where we were, where I just put that circle. Whenever things started turning around, and sure enough, as you can see, boom, turned around and went back up. Now, and I'll tell you why it's going to continue to go up. Or at least I don't see a reason why for it not to go down. And let me get myself off of here so you guys can see what is going on here. So, all right. So, if you've been following my videos, you kind of know what these things are. If not, you may have to go back through and watch some of the earlier ones. But here we found, I put this on a 15-minute, and it looks like there's a very large, especially when it ran like this. This big bullish run here was great. This was great for the algorithm in a positive way for it to go up. Because it left a very large fair value gap, and as you can see, within the hour, it dipped back down into it. And if we were to actually run like this, it didn't get halfway, so that's perfect. You don't want it to get almost all the way through, because if it does, as you can see with the other fair value gap that it hit, so this one, you see it came down, it barely touched in, popped back out, had a couple times of it bouncing in and out, and I just hit the wrong button. Jesus, why do I do that? um, 1 second. I always have my hand over the keyboard, and then I hit space, and space just goes to the next one. So um, There we go. Okay, so of course this one comes in and out a couple times. And what I was saying is I was saying that, you know, I had it on buy and I was going to wait for it to come up and hit this fair value gap, which I think this one was more on the 5 minute. Yeah, so in between the three candles, right, you have three consecutive candles. If there is a gap where there is no tail or wick touching each other, that means they don't balance, which means this area has been unbalanced, right? And it won't get balanced until it gets filled. So you know that it's attracted to that area to try to balance, but it doesn't necessarily have to. Um, so especially like here, if it comes down here, boom, pops out. Doesn't want to balance. You know that, or the balancing is actually up here somewhere. So comes down this fair value gap, like I said, and I was waiting for it to come up to this one, and then I was going to short it. But I think after I made the video, it was late. Yeah, late for me anyway. I was tired. I'd been up since 4 o'clock in the morning because yesterday I had to work. So I just went to bed instead of waiting around for it to come up to this area to short it, and get some quick money. But it stayed range bound for a while, and here is where your dumb money, or your what you call it, your retail money would go, oh, look at this, this is a triangle. See, it's a triangle. Look at this pattern here, right? They may even try to, I don't know, they'll probably try to do something like that. Oh, look, it broke out of its triangle and it's going up this way. Well, what if it would have hit this thing and then bounced backwards? It easily could have done that, but instead there was a fair value gap right here, and the pressure was that it was seeking higher prices because there is liquidity above it. Where was the liquidity? Right here. Right, there's a liquidity. So look, we have two highs, right? They're about equal. So if it would have came up back to this area, most people watching this, especially if you're trading on a 5 minute chart, probably would have tried to start selling right here, because they would have thought this would have been or maybe here, here's a high as well. Um, they may have been trying to sell at those areas, thinking that these are the tops, or this is the resistance area. So we got to sell here. So instead, this thing just blows right through all of them, taking out any kind of buy side liquidity or anybody who are trying to sell short in those areas, and it made another fair value gap. So it made, and this is what is important, is how big this fair value gap is. So this is going to be on the positive side for a while. Before I ever started recording this was going down, and I knew to get into, or try to get into it, and on the positive level. But I didn't, and unfortunately, I probably probably should have tried to. Instead, I was focused on getting everything ready for the video. So, and why did it get down this low? It looks like it would actually cover this entire fair value gap that it already created, on a 5 minute sense. So if we go and we do another 5 minute fair value gap from here to here, go across, it basically went and covered the entire fair value gap. And when it does that, it's balanced. So what's now? Boom, shoot out, look for higher prices. Look, there's equal highs right here. It is looking for higher prices because there's a lot of these. There's a lot of, come back up and a little bit back down and then come back up to almost a higher price. And it's going to want to try to break that because it sees that as, an area of liquidity. So an area of liquidity is where you have or the orders resting, right? So people may have sell orders, or people may have buy orders, thinking they're going to catch a breakout if it goes above here. So, and generally, what happens is it'll go through it and then pull back and then go through it again, just like this one did here. See, you can see this one pulled here, right? Went through all these, pulled back. Lowest it got was here, so it was definitely aiming for this one. and then continued on here. So now what's next? All right, so you have this short-term area, but then you have a larger area over here, right? That has 1, 2, 3, almost four you know, dips and highs in the market. They're just very short term, but they're, this is an area to where you'd look at and you go, oh, look, this is an area you need to short it. So once it comes up this way, you can probably short it and it'll fall. And I'm afraid once it eventually gets back up to this area, it's just going to do what it did right here, shoot right through it. Either shoot right through it or take its time. It could come up, pull back a little bit, make people think it's going to sell, so they'll start chasing the sell and then push up through it, right? And then take all those people out that was trying to sell. And then people lose their money and they go, what? Why'd that happen? That's not what retail told me to do. That's because we don't believe in retail trading, because the algorithm tells you otherwise, because the people who have the big money do the otherwise. They know what the people that have, the dumb money, the retail money, they know what they're going to try to do, because we know what they've been taught. So you take retail theory, you turn it upside down, and you have smart money theory, right? So, and then you have another one here. Look, you have almost three exact spots to where they are touching. So this is the next liquidity spot. And so, and to name off where these spots are, first one is 24.56. It looks like 24.55. Right now we're at 24.14. And then the next one is about 2,500 even, right? So watch out for 2,500. That's the one I was saying, we have multiple ups and downs near this high. So watch for 25 even. Next one is going to be about 26.28. So that is a lot of gaining that you can make in this part of the trading action. This, as you can see, there was a 1 hour breaker at one point. It came down here, went through the breaker, came back up to it, and then bounced out. So this area is balanced. It was or balanced coming from this side, so now we're just looking for the unbalanced, and it looks like this hasn't, these areas here have not been balanced, so that's why Ethereum is having the tendency to go up right now. Okay, like I said, I'm not drawing any triangles or trend lines or anything like that to try to convince you otherwise. I'm just trying to tell you, hey, if I was a regular trader and I was told what I was taught to do by every single person on the internet, this is what I'd be doing. I'd be trying to sell short here. This is exactly what I'd be trying to do. So what does smart money do? It says to do the otherwise. That more than likely, I mean, how many times have you tried to sell short at an area to where you've had a high and then it just busted right through it and then knocked you out of your stop loss and then came back down? And then you tried to chase it thinking it was going to sell, and then it turned around and went back up. How many times has that happened to you? Probably quite a lot if you're a normal trader. So think about it in a different way, right? Get yourself outside that box. It's not the way money operates. Money doesn't operate in geometrical shapes, right? It operates in where are the orders, right? Where is the money that we can go to and release that into the market? That way we can take it, right? That's what the big money people are thinking, right? And so if they think they can take it to a specific spot and then take it, that's what they're going to do, right? And I have a feeling that that's what's going to come next. And that's why I did a part 2 of this video to let you know where this is probably going to go before it gets anywhere else. Sorry, I keep hearing like weird noises through my headphones right now, and I have no idea what's causing it. So I don't know. Anyways, let's take a look at it on a bigger range. Let's go with the 4 hour. Kind of, we're in a very kind of small range right now, 15-20 minutes or 15. There is a 20-minute range, but we haven't been looking at that one. So then here you go. I put another one up here. Here's liquidity above here. I think ultimately that's what it's going for, which is around $3,000. And look, oh look how many of these are around here. You got one, two, and then you got a third one, all right next to each other. So this whole area is just full of either sell limits or buy stops. Generally, they put buy stops at the very end of the wick. That way, whenever it breaks above it, they're trying to catch a breakout. They'll think it's going to come back down and touch exactly that area, you know, to retest, quote unquote, to retest it, which there's not really a retest. It's just it's seeking more liquidity, so it's pulling back down because it knows that the stop losses are just below that, so it's pulling back down to take out the stop losses before it takes off again, right? That's not really a retest. It's just seeking liquidity. That's why I said price does two things. It seeks to balance and it seeks liquidity. It's the only two things that it does. That's all you need to remember. So all you got to do is look for areas of liquidity and also knowing what balances it, right? Knowing what balances it are these, fair value gap areas, if they get filled or not. If not, then there's other areas above it or below it, that could be seeking it too. And if we look at the 4 hour here, you can see another. So there's another fair value gap here. And you can see it barely went inside of it before it got kicked out. I mean, it tried, but evidently there was something it was seeking below. And that was this, right? So this was your sell side liquidity. This is what it was trying to get below. So it knew that there was orders resting right around here, probably buy orders. That way it would think that this was the bottom, right? Or it came down all the way down here. Oh, and it boom got rejected. So it comes back up, hits the fair value gap, knows that it created orders down here, right? Then buy orders or sell stops that went below it. So now it's going to seek to go below that. Well, just below that, there happened to be a fair value gap right just below that. So of course it takes out these orders, hits the fair value gap, boom, goes the opposite way, and now that's what we're doing. So anyways, that's it in a nutshell. I think that's one of the quicker videos I've done, but that's exactly what I wanted to get across, was to make you think outside the box, make you see what exactly is happening without having to explain it in a retail kind of mode. Not using any indicators, not using any kind of geometrical shapes or anything. Just think like somebody who's a bigger trader. What are they going to try to take the small trader to do who thinks like a retail trader? How are they going to take them out, right? Where the liquidity is, right? And then after that, get it to balance. Go for the liquidity, get it to balance. Go for the liquidity, get it to balance. Same thing over and over again. Rinse, repeat, whatever. And then up here is going to be a little bit of a struggle because we do have larger fair value gaps, especially this guy right here. I'm not for sure what this is, but we can make it a little bit larger, especially in the 4 hour gap sense. And then there's another one right here. Well, instead of doing that, what I want to do is copy and paste this one. That way they're the same color on a 4 hour basis. Boom, there you go. So even after it gets above these areas of liquidity, you can see it came right up to it, touched it, and then started falling. So even though there are these areas of liquidity, boom, it's going to hit these areas, and there's going to be trouble after that. So right around 3,000, look for trouble, right? But look for it to get above, 28.90. So there's about a, good $100, or so in between, the areas of liquidity versus the next fair value gap. So, and right now, we're at 34.11. So we've got a while before we get up to these areas that could start rejecting it. Or you got this area that could reject it too, but I'm doubting it because we've already hit the level. We went, and attacked the sell side liquidity.
And just below that, there is another fair value gap right here. It's a very, 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 very small one. I don't think it would go there. There's order blocks in these areas that would try to bump it up as well. And then there's also a weekly fair value gap coming here at 1927. I don't think we're going to get that low. So we've already been that low. We jumped out of it, as you can see. We came all the way down, touched it at one point, came back up, came back down again, cleared out the sell side liquidity. As I said, as we did from the last one. There you go. There's that sell side liquidity that we cleared out and went a little bit deeper into that fair value gap, almost exactly about halfway. That's what you want to look for. If it goes halfway and then shoots back out, you're golden. Like that's like the perfect scenario for it to never, I wouldn't say never come back, for it not to come back in that area again for a while. So instead, we got range bound, but the range bound was creating a lot of different fair value gaps, breakers, things like that. And it did what it needed to do to balance. I think it's pretty much balanced, in this area now, especially in this area, as you can see, because we have it over on this side. Now we have it over on this side. So almost this whole area is balanced. That's why I think it's going to get above this part of the liquidity. So anyways, that is all I got for you guys today. Thank you for watching, and share my videos if you learned something new. You can join my Patreon. It only costs $3 just to join, just to help me keep these going, because it takes a lot of electricity to to run my rig that I have here. I got 3 screens, different webcam, got a pretty decent microphone, all these things that aren't cheap to keep doing this kind of analysis, and it takes up a lot of time to look at every single little detail. So join my Patreon, help me out if you want to. That'd be great. It's Patreon /bodies and wicks. And join all my socials. Everything's in the description below. There's links to a lot of different coin exchanges if you've never used, KuCoin or Gate. Gate is my favorite, actually, because it has almost every single coin that there is out there. I actually do a review of it on here, on YouTube. You can check out that video. It's pretty awesome. Because it'll go through and show you all the different coins it has. It has a lot of, yielding, farming, staking, all that good stuff, and just coins you've never heard of, and coins that are hard to access. But especially like if you go to, CoinMarketCap, and it'll show that like, hey, this coin is only on, what is it, PancakeSwap or something like that. More than likely you're going to find it on Gate as well. It just won't have it listed for some reason. But yeah, that's it. That's all I got for you right now. I had an encouragement from somebody in my comments wanting me to do Bitcoin Cash versus Bitcoin, which I think is really awesome to do across. I think I should do across because these same kind of things occur. If you think that, Ethereum versus USD, this is the only place that these things kind of occur, you're wrong. It occurs in crosses too. So you'll find this in Ethereum versus BTC, or what I'm going to do, Bitcoin Cash versus Bitcoin. All of these things exist, in all these areas. So and if you study all of them, you can kind of know, hey, Bitcoin's probably going to take off because, or Bitcoin Cash could start crashing now. Just by studying, Bitcoin Cash versus BTC, and knowing where certain levels are that you want to look for in that area as well. So, and at the same time, you could look at the Bitcoin Cash, chart, and see that there is, especially if you study the charts like I do, and put all the markers out there, and then you see, oh no, something comes up like this, like for like a Bitcoin Cash or something like that versus BTC. And you don't think it's going to get any higher, and then you also go to Bitcoin Cash and you see it hits a fair value gap. You could be like, oh god, it's going to drop, and then next thing you know, Bitcoin Cash versus BTC, it starts dropping, and then so does Bitcoin Cash versus Tether. So
I mean, this goes deep. Smart money goes deep. So that's why I encourage everybody to try to at least find, somebody out there that's teaching it. There's quite a few different people out there. Some of them aren't 100% correct, but I try to teach it the right way, the way it should be taught. Yeah, just I'll try to keep on putting more of these videos out. That way everybody stays educated. So again, thanks a lot for watching, and remember to always keep your pants on.